Welcome back to Teshkid Effects for another Quant price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Quant chart, which at the time of this recording has continued to hold above our key area of support at around the $133.2 mark. We have also lost the 20-day MA here on the 4-hour chart, which is now acting as resistance. We have also continued to obey the Elliot structures, where we have fully maximized our target areas to the lower side in the formation of this larger Elliot wave count 2 by making a low at around the $126.7 mark. And I now believe that whatever we are seeing at the moment is the start of this massive bounce to the upside in the formation of these higher Elliot wave count 3 to the upside. And before I get further into the technical analysis and also give you the short-term scenarios that I'm expecting to play out, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to continue with the video here on the 4-hour chart by first giving you a quick recap of what has been happening, where you can see that Quant, after seeing the all-time high, we started the bear market where we had been seeing lower prices in this ABC corrective structure in a move that gave us a low at around the $40.1 mark. And after seeing the bear market low, we started this massive bounce to the upside, obeying the Elliot wave structures, where you can see that I have this Elliot wave structure in blue, having the wave 5 giving us a peak at around the $229 mark, and also completing a larger Elliot wave count 1 to the upside. And after seeing the formation of a larger Elliot wave count 1, whatever we expected next is that corrective structure in the formation of a larger Elliot wave count 2. And in the formation of that larger Elliot wave count 2, we also expected to see an ABC corrective structure in a move that has now given us a low at around the $94.4 mark, and also completing the formation of that larger Elliot wave count 2 to the lower side. And after seeing the low for that second wave, whatever we expect next is the formation of a larger Elliot wave count 3 to the upside, and sketching out minimum target areas to the upside in the formation of that wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $399.4 mark, and that is the minimum that I'm expecting that larger Elliot wave count 3 to the upside to do. And in the formation of that wave 3, which is an impulsive wave, I'm also expecting to see a 5-wave structure in formation within the formation of that larger Elliot wave count 3. And here on the chart, you can see that after making our low in the formation of that wave 2, we saw this 1-2 setup. Then after seeing the 1-2 setup, we started this Elliot wave structure, where I'm terming that as the first wave to the upside, giving us a peak at around the $165.5 mark. And after seeing the high for that wave 1, we expected a corrective structure in the formation of a larger Elliot wave count 2, and using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, that gave me a minimum retracement area in the formation of that wave 2 between the fib level 0.5 and the fib level 0.618, which lies between the $133.5 mark and the $126.1 mark, which is the target area that we fully maximized, giving us a low at around the $126.7 mark. And I now believe that whatever we are seeing at the moment is the start of this massive bounce to the upside in the formation of this wave 3, which we expect after seeing the formation of a larger Elliot wave count 2, and using the trend-based Fibonacci to sketch out a minimum target area to the upside in the formation of that wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $229.2 mark, and that is the minimum that I will expect that wave 3 to the upside to do. And in the formation of that wave 3, which is an impulsive wave, I'm also expecting to see a 5-wave structure in formation within the formation of that wave 3, having the wave 5 of the fractal wave fully maximizing our target areas to the upside in the formation of this wave 3. And I believe we are seeing such a scenario here on the Quant chart. And if I zoom in so that you can see that better, you can see that after seeing our low in the formation of that second wave, we saw that bounce to the upside, giving us a peak at around the $148.2 mark in what I'm terming is that first wave to the upside. And after seeing the high for that wave 1, whatever we expect next is that corrective structure in the formation of that wave 2, then expect a wave 3, then a wave 4, and then our wave 5, fully maximizing our target areas to the upside in the formation of that higher Elliot wave count 3, and getting to see whether this wave 2 right here has done the minimum that we expect it to do by connecting the fibs from the low of the first wave to the high of that wave 1, that gives me a minimum retracement area in the formation of that wave 2 between the fib level 0.5 and the fib level 0.618, and you can see we fully maximized that target area, and at some point we lost the fib level 0.618, and because of that I had to extend my target area back to the fib level 0.78, and that is at around the $131.2 mark, and this means this is still a valid retracement area in the formation of this wave 2. So we have not yet invalidated this Elliott wave structure that I have right here. This is still a valid second wave to the lower side, and there are chances that now, given that we have the support of the area at around the $133.2 mark, we might continue gearing up, break above the 20-day MA, have the support that we need for us to continue gearing up, and also see a break above the wave 1 high, which lies at around the $148.2 mark. And the moment we manage to break above the wave 1 high, then that will be enough confirmation that whatever we are seeing is the start of this massive bounce to the upside in the formation of this wave 3, and sketching out its minimum target areas by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $164.2 mark. And once the high for that wave 3 is in, expect a wave 4 and then push even higher in the formation of that wave 5 to the upside. So that is what I'm expecting here on the short-term scenarios. But we also need to have in mind we also need to have a worst case scenario that can happen in case we lose the key area of support at around the $133.2 mark. In case such a move happens and we see a break below that key area of support, maybe even see a retest of that key area of support and continue seeing even lower prices, and that can only happen in case the breakdown that we are seeing in the crypto market continues, and we see also a break below the low that we made at around the $126.7 mark. Then I believe there will be no reason for panic, because I still believe that in case such a move plays out, that will still be the formation of that larger Elliott wave count 2. Maybe there are chances that we have not yet seen the low for this second wave, and we might make one more new low in the formation of this wave 2 before we can start our massive bounce to the upside in the formation of that wave 3. So using the Fibonacci is once more connecting them from the low of the higher Elliott wave count 1 to the high of that higher Elliott wave count 1 at around the $165.5 mark. We can extend our target area in the formation of this wave 2, that is higher Elliott wave count 2 in yellow, back to the fib level 0.78, and that is at around the $115.3 mark. So in case we see a break below the key area of support at around the $133.2 mark, see a retest and continue breaking down, then we can watch the fib level 0.78 as our next key support on the Fibonacci's, within which we need to continue holding within for us not to put a major challenge on the formation of this wave 2. And once the low for that second wave is in, then expect that massive bounce to the upside in the formation of that wave 3. So that is what I'm expecting here on the short-term scenarios, and I've also given you the worst case scenario that we can expect to give us one more new low in the formation of this wave 2, higher Elliott wave count 2, before the bounce to the upside in the formation of that wave 3 continues. So that is what I'm expecting on the short-term scenarios. And also taking a look at the indicators on the RSI, we are trading at around the 43 mark, meaning we have massive room for us to fully support higher prices in the formation of this wave 3 of this Elliott wave structure right here in red. And also taking a look at the MACD, we have been able to print a bearish crossover here, and you can see that we are seeing a sharp decrease in the selling momentum, and I believe we have also printed a bullish crossover here, but we are yet to see that increase in the buying momentum here on the MACD. So let's be patient and see how that plays out, and I'll be keeping you updated.